Welcome to the students of class 10, parents, teachers and other viewers. Today you are now in social science class. Social science constitute many subjects: history, geography, economics, political science, commerce, psychology and many others. Among all the social sciences, economics is an important one. Some scholars, given its importance, consider economics as queen of all the social sciences. Given the importance, Indian school curriculum introduces economics from class 6 onwards in simple rudimentary forms. In class 9th and 10th, some simple and important economic concepts, events and processes are introduced. In the previous sessions, we discussed about what is money, the limitations of the barter system, functions and characteristics of money, different forms of money, what is the role of Reserve Bank of India in printing and minting money, what are banks, how a commercial bank functions, and how banks create money, how they create credit. In this session, we will go little deeply further about the way commercial banks function, how they help in people's needs, their credit needs. Look at the screen. Banks essentially perform two functions. Number one, accept deposits. What are the different kinds of deposit facilities available in a bank? There are four essential deposits. One is that current account deposits. These deposits are those generally used by the business people and for which there is no interest paid. Current account holders can deposit and withdraw at any time, and there is no limit how much you can deposit, how much you can withdraw. The second category, fixed deposits. This means any depositor, you, me, anybody, you can go and deposit money for a fixed tenure. That could be 7 days to 10 years. Generally, fixed deposits receive a better interest rate, ranging from 3.3% to 6.5%. This is the interest rate prevailing as of today. If you keep the deposit for a longer term, you will get 6.5%. But if you are withdrawing, if you are depositing or keeping it for shorter duration, you will get less interest rate, like 3.3%. What is this 3.3% means in simple terms? Though this is not the way banks calculate, I will tell you in simple way. Suppose you deposit 1,000 rupees in the bank as a fixed deposit for 10 years. So after 10 years, you will receive 1,000 rupees plus 6.5%. For every 100 rupees, 6 rupees 50 paise you will get it. This is interest rate per annum. That means 1,000 rupees means 65 rupees you will get every year. For 10 years, how much you will get? 650 rupees. So apart from 1,000 rupees, you will also get 650 rupees after 10 years actually. So 1650 rupees you will get. This is a simple way of calculating interest rate, but this is not the exact method. These days banks also calculate interest rate on the basis of number of days. Third deposit kind is savings account, for which you will not get very high interest rate, but you will get some interest rate. That could be 2.7% to 2.75%, roughly 3 rupees. If you put your money in savings account deposit, say 100 rupees today, after 1 year you will get 103 rupees, or 102 exactly, 102 rupees 75 paise. And there is a fourth, that is the common form of accounts deposit. Most people are having savings account only. Then the fourth common account is that recurring or cumulative deposit. What does this mean actually? People may not be, some people may be salaried people, some people may be daily wagers, some people may be earning weekly. So the banks also allow you that whenever you get some savings, you can go and deposit. You can say that, okay, I will save every month or every 15 days as fixed amount, or I will save every day a small amount. I remember I went to a small town. In the evenings, one bank staff went to all the shops, some 100 shops, door to door. He collected some money actually. This he did every day. So I asked him, what is this money? So the business people may not be having time to come to the bank, but they want to save some money. So what they do, the banks go to the business people and they collect whatever the amount they would like to save. This kind of savings cumulatively, that's called recurring account deposits, RD account. That is also carrying a relatively a good amount of interest rate, ranging from 5.5% to 5.7%. It is higher than the savings bank account. So these are the four general kind of accounts facilities available with the bank. What is the second essential function of a bank? Advancing loans. How they advance loans? One is a cash credit. You go, you tell the bank that I want money, and they will give you on credit. They will give you in the form of cash as a loan. Then second, outright loans and advances. This is the major type of loans available. For example, people borrow from banks for 3 months, 6 months, 1 year, 5 years, 20 years, and so on. For example, in recent times, the home loans are loan to buy car, loan to buy scooters, loan to buy computers. These are all some of the short-term loans. If it is a home loan for 20 years, it is relatively long-term loans. That's the one kind of loan facility available with the bank. That could be for the investment purposes and also for the consumption purposes. What is the consumption purposes? Suppose your parents, your sister, elder sister wants to get married. Your parents may go to bank, they can apply for personal loan that they have to pay for in 5-year time. So people do that kind of, they go for borrowing from that kind of purposes also. Then something called overdraft facilities. For that purposes, you need to understand how the bank functions with the current account holders. I told you what is the interest rate paid for payment for current account holders? There is no interest rate payment. Then why they have to deposit? What is the incentive they have for depositing in the bank? Sometimes business people wanted more money, but they may be having a very small amount in a bank. So what they can do, suppose they want to make an additional payment to purchase some raw materials, they can request a bank to issue a draft for the amount more than what they have in their deposit. For example, a current account holder may be having 10,000 rupees account amount in the bank, but he wanted 15,000 rupees or 20,000 rupees to make some payment for buying some raw materials or building something or some other purposes. He can request the bank that please give me a demand draft or allow me to more than what I have. That's why it is called overdraft facilities. Banks allow you to borrow and then you have to pay back in 14 days time. So that facility is given to particularly business people actually. So they can borrow for more than what they have in their bank account. Then very interesting, very large kind of amount transaction happens in fourth kind of loan facilities. That's called discounting bills of exchange. What is this bills of exchange actually? I'll give you with example of somebody, you have learned in the past when you were young in other classes what is import and exports means. Somebody from say Japan orders cotton from India. So the cotton will go there to Japanese company. So when the Japanese company import cotton from India, so the Japanese company will request the bank that I am importing cotton from India, please make payment for them. I will make payment for you. So with this guarantee, the banks will give you for the exporter from India. The exporter will receive the payment. That's called discounting bills of exchange. So the bank did not receive any money from the importer, Japanese company importer, but it will assure to me an exporter from India and it will make payment for me. Once the goods reached there, once Japan, the shores of Japan, the bankers will come and see the commodity and then he will make payment for the exporter from India. So within 50 days, the importer of Japan, the importer company from Japan, it will make payment to the bank and it will receive its own commodity. So this is called discounting bills of exchange. Banks help people for exchanging their financial transactions. Okay? So these are the essential components of bank system in India. For that matter, any bank in the world. But in recent times, you will find banks do variety of other things. For example, you may be or your parents or many educated like people who are getting admissions, you have to pay admission fee. So the banks help you to make payments to the university or college actually. This facility is called facilitation of payments role. When you are writing for competitive examination, when you are writing for many other examinations, they help you. Then banks also help you to transfer funds. Your parents may be wanting to transfer funds. Earlier, post offices, people used to go to the post office and then transfer funds or make payments. Money order, it is called money order. These days, now banks do this work in a fraction of seconds. You can go to any bank, you can inform that my so-and-so person is having an account somewhere, can I make a payment? So the banks will, in that bank branch, you can transfer money for a small commission or service charges. If you or me is having net banking facility, using the internet to make transaction, that is also possible, that is also done by the banks. So you can borrow from somebody, or you can make payment to somebody, you can transfer money, you can do other transactions in the bank. These days, you remember in the beginning of this session, I showed you about Paytm, PhonePe, Beam and other kind of transactions. They are all called mobile banking. So the mobile banking facility also is provided by the bank. The banks allow to link your bank account with the mobile phone. That is why it is called mobile banking. Then this agency function. The banks also issue credit cards. So credit cards are issued generally by the bank and they get commission for that actually. Whatever the transaction happens to credit card. Then there are utility services. You can make payments of electricity charges, water charges, and gas charges, and so on. Okay, so for that purposes, banks have established bank branches all over the country, for that matter in other countries also. And there are many forms available of the bank. When you get time, please visit a bank. It's a very interesting place. Every one of us should visit. The banks also provide check facility so that you can make payments to some others in the form of a check. The details about how the check payments happens is explained in the book. You can see that actually. Then I already told you with the computer's usage, how banks do all these activities that I described you. You know that many banks, almost all the banks are having branches all over India, for that matter in other countries also. When you visit a bank, you will find them using various forms available for doing all transactions in the bank. Banks also issue a savings bank passbook, check facility. You can use the checks issued by the bank for making payments. You can use your mobile phone, they help you. You can use your internet. Then banks also have a lot of automated telling machine, ATM. So they issue a debit card. Previously they were called ATM card, now it's called debit cards. So that you can go withdraw money from the ATM branches, ATM counters. And there are facilities now, it's called CDM, cash deposit machines. You can go and deposit, you don't have to see the bank branch. You can deposit money in the machine, it will receive. The bank has set up cash deposit machines. And banks are also, for business people, they provide POS swipe machines. These machines, when you go with your ATM card or credit card, you can swipe. It's a new term, swipe, SWIPE. You can swipe, you can make payments, or you can receive payments. When you go to bank, in some banks that's called green channels, you can swipe in the point of sale machines and you can withdraw or you can deposit. Now I'll come to the next issue, that banks do essential activity, particularly not only for the investors. It is not only useful for the savers, those who are saving money. How it can act in the real life situation. Let me give you an example of two people that they may be needing credit. What is credit? Basically, they need money for various purposes. The term credit here I am referring to the need for money. The credit has different meanings. Credit worthiness means, are you a reliable person? In the higher classes, you will know about balance sheets where the credit is on the one side, debt is on the other side. When you are going and depositing money, the amount will be credited to your account. That means the money is put into your account. So it has various meanings. Depending on the place, the meaning may vary actually. So let us look at the credit demand, the monetary requirement of people. I am giving you an example of two persons, Salim and Swapna. Salim is a footwear maker. Let's take, he works in Agra making footwears. He has got order of 3,000 footwears, 3,000 pairs of footwears. So what he does, he wanted raw material, he wanted people also to work to make these 3,000 pairs. So he goes to the raw material supplier, the leather supplier. He says that I've got an order of 3,000 things, please give me. So he says that okay, you have to make payment 15 days time. So he supplies the raw material, all the raw material required for making the footwear. Then he also need money for making payments to the workers. Then he goes to the person who made the order, 3,000 pairs of shoes, saying that okay, you gave me order of 3,000, at least he goes to the person who placed order of 3,000 shoes or footwears, saying that I can make it in 10-15 days, but please give me some advance. So he, at least for 1,000 pairs. And then he gets some advance, and then he goes to the bank that I wanted some money, please allow me to overdraft because I have to make payments for the laborers. So he mobilizes resources, his credit needs from 3-4 people, bank and the wholesale supplier, the wholesale footwear seller and the raw material supplier, and makes the footwears. Within a month or two, he supplies the orders, all the 3,000 footwear. And then he goes to the bank and he makes payment, and with a small amount of interest, and he makes payment for the raw material supplier, and additionally he makes some profit out of it. Then there is another example. Swapna is a small farmer. She cultivates cotton. You know, cotton requires a lot of care. It needs pesticides, it needs water, at least some amount of water. It needs laborers also for weeding activities. But she cultivates cotton, but due to the climatic conditions, the pest attacks frequently. But she borrowed money from the traders who procures cotton. Some 3,000 rupees she borrows, and then she also spends some 2,000 rupees from her own savings, and then cultivate cotton. Finally, due to pest attack, the harvest was not so good. And then finally, when she went and sold the cotton, it was meant for only 2,500 rupees. She spent so much of money, but she incurred losses actually. By the time the trader says that you did not make payment, full payment, all the payment, so the interest rate goes, because when you borrow from somebody, you have to make a very high amount of interest payments. So Swapna, after some time, this kind of situation continuously happening, due to which she had to sell a part of her land actually. You see, Swapna also needs credit requirements. She used some of her savings and then she borrowed from traders. Salim also required credit needs. But what happened to both the cases? Take out your notebook. Situation: who used the bank facilities, who did not use bank facilities. I have described you two situations in which people need credit, how they end up making profits or incurring losses. We also know that why we need to maintain bank account, save, engage in financial transaction. Just take out your pen and a paper, try to do a following activity. Look at the screen. The table shows 3 questions on the first column, and the second column Salim and Swapna, the third column. The questions are: why did they need credit? Second question: what was the risk? Third question: what was the outcome? Think for a few minutes, look at the book, just listen to what I said earlier about these two people, the footwear maker Salim, the farmer Swapna. Recall their situations and try to fill up the columns, the empty columns. I also tried to develop answers which I am showing in the screen. For question number 1, Salim, he wants raw materials to pay wages. He wants to buy food and other essentials. In case of Swapna, she also wanted to buy raw materials, and she also wanted to buy food and other essentials. Like that, you can look at the other responses which are there in the screen and see whether you have filled up in the appropriate manner. These are my probable answers, responses. With this, we will come to the end of this session. Let me recap important points. In this session, we discussed about the important essential functions of commercial banks. We also learned about what kind of interest rate banks pay for various deposit holders. We also come to know what are the important functions of banks. We also come to know that how people in our daily lives need credit and the need for having a bank account so that you can save. You can get the loan from banks. In the next session, we will discuss about what are the other ways people meet their credit requirements. And we will summarize also important points of this particular unit called money and credit. Thank you.